Corn School is brought to you by BASF and Pride Seeds.
Bernard Tobin here on the Corn School today, joined by Philip Shaw. Phil, how's it going?
Going really well. Nice to have you here in the deep southwest, Bernard. First time you've probably been under the Agrodome.
First time under the Agrodome, and as I say, Phil, noted ag economist, market commentator, and farmer. Wanted to get your thoughts on the markets and from a corn perspective for starters, and maybe we'll kick it off there. Phil, the vomitoxin issue, wondering what type of impact that's going to have through the winter. I know it had an impact on you for sure.
Yeah, it was one of the most difficult situations we've had here in Ontario. At least, in many years, the significant DON outbreak and VOM in our corn. And I did have a problem in mine, as many producers did. But really only about 15% of mine was affected. There was lots of other producers that had much more. And in this area in Chatham-Kent, we had corn destroyed. You never like seeing that. But so it was a very, very difficult thing for producers. Large discounts were apparent for the corn that was affected by that. And of course that has a big economic impact on the area and on Ontario. And I really don't know how we're going to deal with this in the future, other than we're going to have some type of plan B to deal with VOM in the future. We're going to have to be ready for this. If it ever happens, there'll have to be some leadership with regard to from our commodity organization and others to help us to deal with this situation, because we don't want to see it again. But as we go into the future for planning for next year, producers will be picking varieties that they had experience with and maybe didn't have some of the VOM problems. But it was a perfect storm that affected us, and I really don't have the answers to it other than what I've said in my column, which I said we don't want to go here again.
Yeah. Hey, let's talk about some other signals that you're going to be watching as the year comes and progresses. What about I guess you're a big watcher of basis.
Well, I think that futures tend to be somewhat easier to think about than the Ontario basis values, especially for corn. Ontario corn basis values are different across the province. If you think about Ontario, we're about 14 miles from the Michigan border here, versus the other end of Ontario at the Quebec border is about an 8-hour drive from here. So basis values with regard to what they are different throughout the province. For instance, in eastern Ontario, earlier this fall, we had a basis value of $1.50 over our nearby futures month for corn, while down here it was more like 60 cents above the nearby futures price. And the reason it is different is because there's different supply and demand for this corn at different places in the province. And now those basis values in eastern Ontario have backed off a little bit, and here in southwestern Ontario we've gone up. Typically in Ontario we produce more corn than we need, and we have to export that out. Historically that's meant exporting it to the United States, which is akin to importing snow to Canada in January, but we did that. But exporting now means a little bit different in Ontario. We've been able to export corn because of the CETA agreement to Ireland and places in the UK, while the Americans could not do that.
Right. So
that gave us opportunities. So export opportunities on Ontario corn are much more different than they used to be when we used to just fire sale things across the border. So yes, I do look at basis values for corn, and when we do have good basis values, it's something that we have to lock into. We think maybe more about flat prices sometime. I know especially in eastern Ontario, my guys down there, they had a $1.50 basis over their nearby futures this past fall. My goodness, that was about 90 cents more than me, just simply because of the location in Ontario. So yes, I do think about that a lot, try to measure it. It takes daily market intelligence to look at it. And then, of course, above that, you have the futures values, which depends on the great powers like the United States and others throughout the world.
What do you think of what we're seeing here now? You're seeing some $5 contracts out there for 2019 new crop. What do you think of that?
Well, I think it never hurts to contract corn where you're comfortable and profitable. You know, I think of that. I think of that often. I think it has to be kept in mind, though, that we've been in a side range on the futures market for corn for several years now. As we move ahead, eventually we're going to get out of that. We're going to go out of that trading range, and I hope we go up. For instance, the total demand for corn this year in the United States is over 15 billion bushels, just for the total usage on corn. My goodness, the crop we produced is 14.6, so our ending stocks have actually gone down. Bernard, I've stood here before when I was talking about how huge the U.S. crop was, and it was 8 billion bushels. So now we're using 15 billion. So at a certain point, since 2012, we've been getting good crop after good crop after good crop, and it all works if we can keep production going. But eventually that is going to change. And when that does change, price will have to go up. The futures price will have to go up to ration that demand, because demand is so strong. And you know, you and I sitting here, $5, yeah, that sounds pretty good. And I've actually sold some corn for $5. I did it several months ago for next year. Nobody knows what the price will do, but we have to keep in mind that we've been in this range for quite some time. The Canadian dollar is helping us to some extent on corn to get that $5, but not as much as it would be on the cash price for soybeans in Ontario, where it has more of an effect.
Let's talk a little bit about ethanol. E15 in the U.S., probably not going to make an immediate impact, but hey, where would we be in Ontario now without ethanol?
Well, in my opinion, the Ontario Ethanol Growth Fund, which pumped $512 million into the Ontario economy to help build these ethanol plants, has been the most successful provincial agricultural policy ever, because it gave impetus to starting 5 different plants across Ontario. So about 35% of our corn that we grow here goes into industrial use in ethanol. So if we didn't have that 35% of Ontario corn, which is, you know, we produce about 350 million bushels a year, so that's a significant amount of corn that goes into gasoline here in Ontario. If we didn't have that, we'd be exporting it out or putting it in the feed market, which is less and less in Ontario. So you know, it's very good we got that in Ontario. We also have the increase to 10% in our ethanol blends in Ontario. But keep in mind that we can also import ethanol from the United States to satisfy that requirement. The ethanol sector in the United States right now is very unprofitable. Margins are very poor. And you know, they're getting away with it partly because they're exporting a lot of ethanol to where? To Brazil, and Brazil and Canada, and they're hoping to do it to China, and I hope they can, because right now the margins are very, very poor, and that will be a drag on corn demand at some point, if it isn't already, because they cannot continue where they are right now with regard to ethanol margins in the U.S. That's partly related to the price of oil.
Hey, final thing I want to talk about is acreage. There's a lot of to and fro, a lot of people torn about corn acres in the U.S. How do you see that playing out? And obviously, big impact on price.
Well, you know, I think the default has been since July 6th, when the Chinese put tariffs on American soybeans, and we had the great reduction in price of soybeans, that we're going to have a lot more corn next year. Well, let me rephrase that. We're going to have a lot less soybeans planted next year. Obviously, some of that will be more corn, but it will also be going into other crops, whether that's wheat and cotton and things like that. It just stands to reason, where you've had that much of a decrease in cash values in the United States versus corn, that you're going to see less soybean acres grown. And the USDA has said something like 82.5 million they're expecting next year, and about 92 million acres of corn. So that's likely what will happen based on what we know now. But of course, as you know, there's many other things in the mix with regard to what's going on in South America. It looks pretty good there now, real good right there now. But if we miss these rains next week, things could turn around, and you know, then things could get wild.
Weather events, June, July.
You know, the futures market will present risk opportunity for you that you may or may not take. You know, there's just a lot of things that could happen between then and now.
Well, we'll pay attention. Phil, thanks for taking the time.
It's certainly a pleasure. We always appreciate the good work that you do, Bernard. And I think Real Agriculture, Real Ag Radio is just one of the best programs out there. And I wish we could have more of it.
Wonderful. Hey, thank you for the plug, sir. Great to be under the Agridome.
Certainly a pleasure.